So is inflation really improving, right? We see the headlines that inflation for the month of June was down to 3% from a year earlier, where it was at 9% year over year, according to the official CPI, or we call it sometimes the CPI, that it's not always accurate. So what really is inflation? Is it getting better? Is it getting worse? What's happening? And so in this video, what we're gonna do is we're gonna jump into kind of the impact of what inflation really is, how it impacts you and your investments, and we're gonna go for it. So let's jump in. All right, so my name is Bronson Hill. We have a lot of multifamily buildings. We also do alternative investments such as oil and gas, car washes, and other types of alternative assets. And we do videos like this. So hopefully you find value in this. Please smash that like button so we can help spread the message and share this with more people. We're gonna jump into it real quick. So really, what is actual inflation? This is a really important concept, because if you think inflation is super low and it's actually in fact high, you're gonna make a lot of mistakes in how you invest. Right? So Shadow Stats, this website that I follow, it says inflation is more like 11 or 12% when you look at 1980 metrics. So why is there this big difference between 3%, which is officially being reported, and 11 or 12%? Well, it's because the CPI, as I said earlier, we call it the CPI, it doesn't share honestly what those facts are. It doesn't include things like food and energy. It'll substitute things in. It'll say, hey, the price for apples has doubled in the last year, but you'd switch to oranges because apples are not too expensive, or you're in a 2-bedroom apartment that's $1,200 a month. But if rent goes up to $1,500, well, you just stay in a 1-bedroom, or you move to a 1-bedroom for $1,200. So there'd be no change in inflation rate. So there's the ways that they fudge these numbers, and it really does happen. They'll substitute things in there, and they've changed that officially, I think, at least 3 times since 1980. They just changed it again in January to make it look better than it really is. We're going to get into why the government wants to fool you and why they look at things differently from that. So I want to give an example of this. What is the result of having more currency? We talk about money supply has increased. It was about a 40% increase over a 2-year period from February 2020 to February 2022. So the amount of inflation we're going to get is affected by how much currency is in supply. It's also affected by government deficits, right? The more money that is spent, that debt actually creates new currency. When it's paid down, it actually reduces the amount of currency that's in there. There's different ways to measure how much money supply there is, but that has a significant effect. Example of this, I'm sure you're seeing this. You can come up with plenty of examples yourself, but I was at this night market, which is like a local fair nearby, and I went and they had all these kind of food trucks and vendors and things like that. And I was expecting kind of $10, $15 prices for food, but everything was $20 to $30 or higher just for a basic, whether it's a burrito, it was Chinese food, whatever it was just much more expensive than I thought. So I'm seeing basically things have about doubled in the last 2-3 years on those kind of things, and we're seeing it, right? So we're seeing it. So what we're actually having is substantial inflation. So why does the government want to fool you, right? Why would they want to pull this wool over your eyes and make you think, hey, you're not that smart, and we're going to put it that way? Well, the reason why is they want you to think inflation is lower than it is, so that you'll spend money, so that you'll vote for them politically. So they find ways to try to make it look better than it is. A few things they can do, if inflation gets down to 2%, they can say, oh, now we can lower rates again, right? So we can bring rates down. It keeps the cost of the big government debt lower, because the interest cost is lower. So they can say, okay, we're going to pay less on this because inflation is lower. So they can bring those interest rates back down again. Also, again, there's a big political agenda to make you think things are better than they really are, so that you'll feel comfortable with spending. So it does feel really sneaky, like why would somebody do that? But it just continues to happen. Now they look at government spending as well over the next 10 years. We're expecting a $2 trillion, with a T, $2 trillion a year deficit every single year for the next 10 years. And it's going to be higher than that, because they're going to find other things to spend on. There's going to be new crises or issues that come up over the next 10 years. And so again, that's just going to continue to create it's going to grow the currency supply. It's going to grow. Inflation is going to continue to grow. So again, there's ways you can take advantage of. We'll get into that here in a second. But what is the impact for you and your investments? What impact does this have? If you're a real estate investor, if you own different assets or stocks, what does it mean for you? I'm going to talk really quick about real estate. Well, real estate, as you've watched, currently rates are much higher. We were seeing I know people that have mortgages at 2.25% for 30 years. Incredible, right? Well, now we're seeing those same mortgages go for around 7% or higher in some cases. So, things have come up substantially to where they were. So what happens when rates go higher is that the cost of money is higher. The cost of borrowing is higher. If interest rates were 0%, what do you think the cost of real estate would be? It would be sky high because people could buy whatever they want. There'd be 0% on everything. And so as interest costs are higher, it causes valuations to come down. A couple months ago, I saw that real estate valuations across the country, it may be different in your area or whatnot or where you invest, but it was down 18% in single family stuff. We're seeing it in multifamily as well. So like this property behind me. So it's getting challenging right now to be able to do that. So we're seeing a lot of deals that worked well maybe 6 months, a year, a couple years ago, especially a couple years ago, worked really well. I mean, there was a time, especially in multifamily, between 2014 and 2020 or 2021, and things were just, everything was working, right? It was, you could do a lot of things wrong. Now it really is like you got to operate things very, very well. And so we're seeing more risk there as well. So this really leads us to interest rate risk, right? So there are investments that have interest rate risk. If you have a property, let's say we've got a multifamily property like the one behind me, and we have to sell that property, a couple years, we got to refinance, then the issue is when you're going to sell or refinance, what does that look like? If somebody can't buy your property except at a very high rate, that means the valuation, it's going to squeeze the profit out of it, right? So there's ways we try to avoid that by doing value add deals. We come in and do renovations, rent's $1,000, you put in $6,000, you have a $500 a month upside, those kind of things. You can do fixed rate debt, you can do other things to try to mitigate that, but there are issues with that interest rate risk. So we've shifted in some ways to do things in real estate and also do some things outside of real estate. So we've done ATM machines and car washes and oil and gas and different types of deals, because what it does is it gives you a lot of times the ability to not be enslaved to that interest rate risk of what is it going to look like when rates go higher, or what is it going to look like when we're going to have to sell this asset in a number of years. So that's really how we try to mitigate some of that. And so I'll get into that here in a second. But just to sum it all up, inflation is here to stay. It's not going anywhere. And it's worse than what they say it is. Just look at your costs. I think if you were just to measure how much you're spending each time you go to the grocery store, or how much you're spending on gas, or how much you're spending on these different things, it continues to stay high. And so it's important that you have a plan to be able to take advantage of this. And so I want to share this quote with you. This is from Vladimir Lenin, which is not the most savvy guy, at least when it comes to capitalist stuff. He's very much a communist. But this is what he said. He said, "The way to crush the bourgeoisie is to grind them between the millstones of taxation and inflation." Doesn't that sound great? You're in the middle of two millstones being grinded. One is inflation, the other is taxation. So you make money, you're being taxed. You keep your money in the bank and it's being eaten by inflation. And that's where owning real assets can really help you to use inflation to your advantage. So I did this video about using inflation to your advantage, went more in detail. Check it out up here. I also wrote this ebook you can check out in the comments below, or in the description below. And it's just that title, How to Use Inflation to Your Advantage. 50 color pages, use some things about, using debt to your advantage, using precious metals, other things. Really had a lot of fun writing that. Check that out down below. Would love to have you check that out. And also you can join our investment club at our website, Bronson Equity. So thanks for taking the time to educate yourself. Would love to know your feedback, your comments on how you see inflation improving or getting worse, and what your thoughts are on it.